Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello, and welcome out to another Insights. Hope you all had a great weekend. It is Monday, and we're about to do the big guys. It feels like I'm finally kind of on track. Things, like I've said before, have been chaotic. They're always chaotic, and that's the crazy thing. It's, trying to trade and keep life straight and keep the business together. I mean, everything, trying to do it all together is it's quite a bit. And a lot of people think that, trading's this great, wonderful life and everything's easy and kick back and you just chill and you don't have to work a lot. To a certain degree, it's, everybody's sold that dream, but it's not necessarily always that way. I mean, if all I did was traded, then yeah, but I also teach, I develop products, I do all kinds of stuff. So, business is one of the things I developed a passion for as a kid. So not only do I get the business of trading, but I also have my teaching business, my coaching business. So I do both. And it, like I say, some people make it out to be simple and easy, and there's not, a lot of demands on the time, but there is. And then trying to deal with family stuff and all that, it keeps me going. Let's put it that way. So, but the good thing is I'm a workaholic. I love what I do, and so I'm not complaining. So if that's the way it comes out, don't take it that way, because I do. I'm absolutely passionate about what I do, and so getting up and working every day is fun for me. But I want to start off like we usually do with something motivational, if you will, or just something thought-provoking. And this is one I just found today. And 10 things to give up. Number one, excuses. They're absolutely killer, right? Self-doubt. We've talked about that in Advanced Trading Mindset. Fear of failure. And with respect to trading, that's a huge one, because the only steps to success are through failure. You cannot succeed unless you make mistakes and learn from it. And in the market, considering that sometimes how deep we have to go and how brutally honest we have to be with ourselves and recognize that fear of failure is a massive challenge for a lot of people. And a lot of it has to do with upbringing and things we saw as kids or things we've been programmed with from society or parents. Most of it's from our parents. But there's also the flip side of that, where you have fear of success. And that is something that a lot of people, when you first hear it, and I did the same thing, that doesn't make any sense. Why would you be scared of success? But the reality is, and I know people like this, they say, well, if you make a bunch of money, you're going to have more problems than if you don't have money. And I just kind of chuckle, and for those that I know can handle a discussion or an argument with it, I literally just had it yesterday with somebody. Well, if you have money, then you have bigger problems. I wouldn't call them bigger problems. I think they're just different problems. You have to deal with taxes, and you have to deal with other stuff that when you don't have money, you don't have, but you still have to do taxes regardless of what income level you're at. The beauty is that when you have money, maybe you do have more problems. But the beauty is that you have people, you can literally pay people to take care of those problems for you. You can hire an accountant and pay them whatever you need to deal with the financial things. In other words, you can delegate and pay people to do that. Whereas if you don't have money, you can't afford to. So you have to do it yourself. So this whole fear of success thing is real, and it's kind of crazy to me. It doesn't make a lot of sense on the surface, but when you dig deeper, it does. Because then people say, well, but if I'm successful, then I have to my friends won't want to hang around me. I mean, a lot of this is subconscious. We don't think about it consciously, but it's like, what about all my friends? These are all the people I associate with. This is my comfort level. This is where I'm comfortable. I might have to make new friends, or I might have to give up friends that I like because they don't have the same mindset as me, because we're in different categories now. Because people put themselves in different categories. They literally categorize themselves. I don't know if I've ever talked about this, actually. I think it's a good point. And most people I know are like this. They say, well, we're just, and they literally say it to me. Because most people don't know, because it's not, there's a lot of stuff behind the scenes that people don't see, they don't know about, and I don't flaunt anything. But they say, well, we're just average. You and me, we're just average. I'm sorry, but I may look average, and my lifestyle may be average, and I'm not bragging here, but I'm not average. I don't think like the average person, and I don't do things that average people do. And yeah, maybe my life looks average right now, but one day it won't look average anymore. And then people go, wow, what happened to that? But the reality is that people don't want to get outside their comfort zone. And if you become different than average, then you're different than everybody else. And now all of a sudden it's this uncomfortable spot because I don't know how to act because I'm different than other people. And I'm outside my comfort zone. And so if you become successful and you make all this money and now you have that, you have to give up a lot of that stuff and change a lot of things. There's a lot of change that comes with success. And a lot of people are scared of change. And so subconsciously they sabotage themselves, and they're really truly scared of success because of all those changes it brings. And so they make all these excuses, number one, which, well, if you make a lot of money, you just have more problems. Just different problems. Anyway, I'm getting a little off here. Number 4, procrastination. That's one of my challenges. People pleasing. I've not been known to do that. You know what? I didn't even notice that. There's fear of success right there. I didn't see it on the list. How did I miss that? I was probably scared I was going to see it and be successful at it. I don't know. I'm just kidding. Negative thinking. That's kind of an obvious one. Negative self-talk. That's even more important. Negative thinking is one thing. But when you talk to yourself in a negative way, that's a whole different ballgame. And we've got to be very cautious of that. Judgment of others. That's the funny thing is sitting where I've been, and this is one of the things that in the last several years especially, and it's one of the things that's been hard about me for the divorce, is I used to be a very judgmental person. I look at people and, oh, the divorce, I can't succeed at that. And it's like, and here I am now sitting on the other side of it and just kind of baffled. I'm going, how did that happen? Well, the reality is that, obviously I made mistakes, no doubt. And I chose a woman that had unrealistic expectations, that did not know what to expect or did not know how to be successful. And especially looking back, there was all kinds of red flags. I saw a lot of it. I just didn't, you fall in love and you get these googly eyes and you kind of dismiss a lot of this stuff. It's a lot like trading. You get all excited about a trade and you dismiss a lot of red flags that are there because you have an outcome that you want, you have something that you want to make a profit. And so instead of looking at reality and looking objectively, you put these rose-colored glasses on and you see only what you want to see. And that's a mistake I made. And I really can't, while it's not been fun and it's been painful and it's been difficult and costly, I have 2 wonderful kids from it. So I can't really, it's very mixed feelings. Because I always saw myself as getting married once and having it forever, like my parents did, and having that nuclear family. That was always the vision I had. And here it is crumbling. It's like there was nothing I could do about it. Nothing. I did everything in my power. And even the counselor that we went to, she goes, there's nothing you can do. You've done everything you can. You've done everything that somebody would expect you to do in their situation, and she just doesn't want to try. She just doesn't want to work at it. There's nothing. She goes, there's nothing you could have done. Nothing different. And I've learned a lot in the experience, not only from a trading perspective, but one of the things, number 9 there, judgment of others, is that, and I kind of learned this before, it's just the divorce kind of cemented it, that you never know where somebody's been. You don't know. I've had enough experiences and enough failures in life and enough hard times in life that it's easy to look at other people and say, well, they're, and to judge them based on what you see on the outside, but you really don't know. And it's not easy to sit there and go, I was just downtown Seattle yesterday. We went down to Pike Place and just hung out. And there's a guy there on the street corner begging for money. He's got a little cup, and he's almost getting up in my face. And I'm just, the first thought is, why don't you go do something productive? That's the initial thought. And then I have to consciously force myself to go to this place, say, you don't know where that man's been. You don't know what his life is like. You don't know what he's been through. You don't know what he's experienced in life. He's an older guy. He's probably in his late 50s, early 60s maybe. Excuse me, middle-aged. But I don't know how old he was. He had a big, long, scraggly beard. We didn't look too homeless. I mean, he didn't look like he'd been sleeping under a bridge. But it's easy to sit back and, look at other people and go, oh, look at that. But the reality is you don't know what they've been through. I don't know why I'm spending time on this, but it's one of those, I guess maybe one of the reasons, and this is, just digging into myself, and I am, my test case, because I try to look inward. And this is one thing that we all experience it, and it's one of the things that we always ask is, how many of you didn't tell somebody you were coming here? Like we go to the summit or any kind of workshop. And a lot of times we know not to talk about certain things with certain people because we know they're going to judge us. And I've said openly here, talked about, my family and how they're not supportive. They're very judgmental of me. They don't believe in what I do. They don't believe in the whole trading thing. They don't understand it, so they don't believe it. And because of that, they just stay in their little box, and they are extraordinarily judgmental of me. They judge things from what they see on the outside. They really, the sad reality is it's my family. You'd think they'd be the ones that know me best, but they don't. And the reason they don't know me anymore is because I don't let them in, because I got tired of the negativity. I got tired of the judgment, the telling me that what I do isn't legitimate, essentially. And they're not the only ones that have said that. A lot of people say that it's not, you can't time the market. You can't do this. You hear it all the time. I just heard an ad on TV. You can't time the market. I mean, people have these crazy beliefs that they don't, and to a certain degree that's true, but in reality it's not. We can time the market. We can figure out what may happen next. We never know for sure, but we can put the odds on our side. But the reality is that we're all judged by others. And part of the reason that I have become much less judgmental is because I see and I feel the judgment from other people, specifically my family, which is sad to say, but it's true. I don't love them. It doesn't make them bad people. That's just who they are. And most people are very judgmental, including myself. And I have to actively, consciously work against it. So anyway, I know I'm kind of way off of trading here, but getting into philosophical stuff. But so I'll move on. But then the last one is important too, negative people in your circle, which goes right into what I was just saying. And honestly, as much as I love my family, I don't spend as much time with them as I'd like to because I don't want to hear the negativity. I don't talk to them about what I do professionally because they don't understand it, they don't want to understand it, and they're not going to be supportive of it. They've proven that. So we don't even talk about it. There's no sense. We haven't for years. So, and if you've got, the sad reality is if you have family like that, you have to kind of distance yourself from them. Because it is tough enough to trade on our own, to be kind of out in this little world all by ourselves and having to try to succeed and make things happen in a very difficult environment. When you have somebody over here and you're constantly saying, oh, you can't do that. That's ridiculous. That's dumb. That's not possible. You can't. Or if it's just the energy that they bring to it. So we've got to be very careful. We've got to be very protective of our own self-talk, going back to number 8. We've got to keep it positive. We've got to keep a solid belief in ourselves. We've got to keep all these things on the list. Make sure that we're giving up on all these things so we get rid of them. If you have friends or family that don't believe in you, that don't support you, then either stay away from them or make sure you don't talk about the subject that they're going to be negative about. So anyway, enough about that. I know I'm looking at the timer over here. And I'm just going, whew, I went on for a while, but I think it's worth it. So moving on now, and I'll keep this actually relatively short. because not terribly excited. There's really only one chart here that I got super excited about, and the rest of them are kind of, threw a bunch out because there's several earnings coming out. There's 5 or 6 that they looked good, but the earnings are coming up in the next day or two. And several of these, they're already through the entry point, so we'll see what the rest, the next few days bring. But I keep saying this cough is almost gone. I can't say that anymore because it's been, a month, 6 weeks. I keep saying, oh, it's almost gone. It's going to be gone, because usually it's gone by now. It still pops up. But there is today. It's not a full end-of-day update yet because we don't have the end-of-day data fully done yet. We've got another 20 or 30 minutes before it comes out. But the SPX was up 27 today. Big update. It did break out of the high here, just barely. Only by 6 points. We got, what's the close there? 1940. Closed in 1945. So close 5 points above that high. So a tiny bit. So we'll see. And here's the funny thing. We went from very oversold in the market to now we are pretty overbought. A bounce like this, granted, you notice what happened last time back here in October when it sold off pretty quick, is that it bounced for a few days and then it went sideways for a little bit, and it did continue to rally. We could get that kind of rally here. We may run back up to 2,000. But the reality is that we went from oversold to now we're slightly overbought. So what's going to happen next? I don't know. It's hard to say. And that's where I don't like the position the market's in. I don't like the way it is right now. It is what it is. But it's hard to get in a bullish position here because it has run so far so quickly, even though we do have a kind of a mat hold pattern today. I'm not excited about the upside because it's already run quite a bit and it's already somewhat oversold or overbought. But then there's a risk that it continues to run kind of like it did last time and we have a big rally. And so without kind of a slowdown before it rolls over and goes down. So it's kind of this really mixed, just kind of, I'm not sure what to do with the whole thing. Because overall, big picture, I'm still bearish. Short term, it's very neutral. You can't, there's a bullish pattern, but how much more is it going to run? 1815 and 1945, it's 130 points in, 6 days? That's a big move. That's 6-7%. Doesn't happen very often. So it's hard to tell, and that's where, like I say, I'm not that excited about these. Looking at all the other markets real quick, NASDAQ, very similar. Same thing on the Dow, except the Dow had a bigger breakout. Transports up, but also at a resistance level. The Russell only up 5. Well, that's not today. We don't have current data on that yet. Here's an interesting thing on the VIX, and I don't know if I showed this. I think we did talk about here in the insights. I'm trying to remember if it was the insights or if it was in the market mashup. But interestingly enough, when you look at the VIX, if I didn't cover this last week, back in 2007, before the crisis hit, look at what happened to the VIX. It spiked there in mid-late 2007, and then it stayed up in this range between the 17 and 30 range. It stayed up there. It stayed elevated, and that was, we're talking, it blasted up and it peaked out there in August of 2007, and it was a year later when the market finally cracked and the crash happened. Well, it started to happen here, yeah, but basically a year later. And we've got a similar type of pattern going here where we spiked back here in August. Interestingly enough, it's August, the same month. We spiked up to that point, dropped back down. We did go below that 17, went down about 15, but we didn't come back to the lows. And now we're back up in this, we're kind of stuck, it feels like right now, in the 17 to 30 range, kind of like we were before. So if this pattern right here is developing again, that could be a clue that says, get prepared, get ready. Because we very well could, the setup is there. I've talked about it many times here. There's, the trifecta is kind of in place. You got the baby boomers, you've got the credit markets, you've got interest rates at basically zero. They're almost negative. The Fed really doesn't have any more ammo. There's not much more they can do. The quantitative easing is kind of worn out. There's not much more that can be done to jolt this economy. There could be. And if we're not going to get into politics, but the thing is, politically speaking, they could very easily fix this economy. in my opinion. Except the problem is that in Washington, D.C., things take forever. If you get rid of the regulatory BS, excuse my French, but the bureaucratic red tape that slows businesses down from opening their doors, most of it's unnecessary. It's unnecessary, it's expensive, and it takes forever. Why? Because you have bureaucrats sitting behind desks that have no incentive to produce anything of value. They have no incentive to rush or hurry or do anything speedy. In fact, they have kind of a disincentive. They have kind of an incentive to actually slow the process down because then they can justify their job. Most of them are overpaid. They make too much money. Their job is too easy, and they have nobody there to be accountable to. There's no reason for them to rush. So they take their time. And you know who gets the brunt end of it? Businesses. I have friends that deal with the regulatory stuff all the time. I've had to deal with it several years ago. When it takes weeks, if not months, just to get an approval for something that is relatively simple, because these bureaucrats just aren't getting to it because they're in no hurry. And it costs 10, 15 times more than it should to get a permit, to basically get the blessing of a bureaucrat to say, oh, it's okay, you can do that. Something that's already designed to do. You have pathetic laws in place that slow things down. And you got people, I got a friend that's sitting on his hands waiting to open a business. But he's waiting for some bureaucrat to get off his butt and actually do something, go out and look at it and say, oh yeah, that whole thing was designed to handle what you want to do. Yeah, go ahead. It's no problem. But here you are 4, 5, 6 weeks in and $600 some for that process. It should take $50 in about a week's worth of time to get that done. But you have all these stupid laws in place, these bureaucrats that if they hurry, then they run out of a job is their mindset. That's the way they think. If I go too quickly, then I won't have any work to do. What am I going to do then? It's just stupid. Anyway, now I'm really getting off rambling. So I get frustrated by it because I see too much of it. I've experienced too much of it, the regulatory stuff. I mean, a lot of it we have to deal with here. It came up in 2009, 2010. Apparently, you're not bright enough to understand that if I use the word easy or simple, then you might misinterpret that and think that trading is easy or simple. Even though the entire time I've been teaching, I've always talked about it and said that it's difficult. But I can't say easy or simple because you're not smart enough to figure it out on your own. But anyway, let's get off of that stuff. Let's get to something positive. Excuse me. Adobe, I'm going to rattle through these fairly quickly because Adobe, look at this thing. It sold off big time. I think that was earnings. Pretty sure it was. Sold off from 90 to 72. Now it's rallied back up to 84, which is the previous low where it bounced a little bit. So we're sitting right there. The only thing about this, I don't expect it to roll over and just tank. It could, but I would expect a normal reaction would be to go sideways for a few days. So this is one of those where if tomorrow it takes off to the downside a little bit, I may take a little position in it. It depends on what it looks like, depends on what the overall market's doing, but I would expect it to kind of dance around this 83, 80, 84 area for a few days. That would be the normal behavior. However, there's the hard part is that what if it tanks like it did just a few weeks ago? And what if you don't get on, you say, well, I think it's going to do this, and you don't get on the ride, and it takes off and tanks back to 72 again. So what I'll most likely do, depending on tomorrow what the action looks like, if it drops off a little bit, hits the entry point, probably pick up a small position with it. But nothing too big, nothing too crazy. Because the market is in kind of a mixed area. So basically kind of pulling back, slowing down the trading a little bit, taking smaller positions, less risk because of how things are. And just gear up and wait for a little bit, maybe a few days for the action to play out and see what happens. AET, Aetna. Nice rising through methods. Breakout, a very small breakout of that downtrend. Not a whole lot of volume. In fact, you can see the volume has dried up significantly in the last few weeks, especially on this rally back to the upside, which is what is very normal. Most of these stocks that have rallied, the volume is getting lighter and lighter as it rallies, which is a bearish sign. That's another reason that I'm nervous about getting any bullish positions. because the volume is light. But it can keep running even with light volume. That's entirely possible. So we've got to guard against it and be careful, but don't ignore the bullish positions. This is one of those that is already through the entry point by $1. So it would have to pull back. So we'll see what it looks like in the next few days. AGU. This one basically going sideways, looking for it to break to the downside. All right, if we look at let's get bigger position, longer term picture, you can see it's got a long ways that it could go realistically. And indicators are starting to show some bearishness. You can see Stokes is trending lower. MACD's kind of flattened out. Looks like it wants to move lower. The bands have turned down, excuse me, and the moving average has turned down. So it looks like this thing wants to break to the downside. This is one of there's probably a handful in here that haven't broken down yet or haven't broken out to the upside. In other words, they haven't busted the entry point. So I like this from the sense that not only does it look good and bearish, but we're ahead of it far enough where we should be able to catch it if it breaks. Alaska, again, this is one that y'all know that I'm not a big fan of using resistance or support. I'm more of a breakout trader, but I'm not going to ignore what could be a potential opportunity. We have the beginnings of a double top here. So if this thing rolls down, another one that a little skittish on, I would expect it to go sideways for a few days before either breaking down or breaking up. So as far as playing the bearish, taking advantage of this trade, I would take a smaller position than normal just because of that potential risk for it to continue to run to the upside. Bluebird Bio, this is an extremely volatile thing, and this is the only reason I left. We got earnings coming out tomorrow according to this. I did not verify that, so you may want to double check it if you're serious about trading this. At this point, I'm not. We'll see what tomorrow brings. I'll just put it on the radar and watch it, see what happens. But there's some huge potential. I mean, you can see it's a 13 or about a little more than $12 of potential here. It doesn't look like a big range, but $13 of potential, $12 of potential on a $52 stock is huge. So, and you can see, I'm almost positive this is earnings back here. We got from 84 to 52 overnight, 34 points on an $80 stock. That's enormous. What, 40%? I mean, that's a killing. So earnings is a major wild card. Might even, if they come out tomorrow after the market, this might be one to strangle, but the options have to be priced right, and that's going to be the hard part. That's why the chicken trade, the strangle, is almost non-existent anymore. So it's very difficult to take advantage of it because the spreads or the pricing is just skewed. So we'll see what happens with that one. Burlington, another rollover. Looking at the potential for a double top, kind of a double top. We've got a shooting star type of pattern that showed up today that also happened 3 or 4 days ago. So if this breaks to the downside, then I'd be pretty comfortable with a move to the downside. You're talking $3. So this may be just a quick little play, hopefully a day or two, if it materializes. Cavium Network Semiconductor Company. Another one kind of hitting the top. You see it's pretty overbought. We had the bullish engulfing pattern 6-7 days ago, which created the run to the upside back up to about 58. We've got a dark cloud cover today. So, yeah, another one, not excited about it, but we'll keep an eye on it and see what happens, and there may be some potential there. CHRW, this is one that's been on the radar quite a bit lately. And we had that ascending triangle that busted out there from 64.5, 65 up to 71. So nice little trade there. But now we've got some bearishness to it. We've got kind of a double top, even though they're close within 5 days. We've got a bearish engulfing pattern today, which actually has engulfed the previous 4 days. And we had a decent little increase in volume, about 500,000. So about a 20% jump in volume. Not enormous, but enough to get the attention. And this thing was pretty overbought anyway. I'm not sure what this looks like. Yeah, we've got, Stokes and MACD both rolling over. So very well could get a drop in this. And I like, there is a little support. Actually, that's a pretty solid support there, about 68. So we have to be cautious of that. It may bounce there. This is where, and see, that's the thing. We're already 20 cents below the entry point, which 20 cents is okay. If it gaps down tomorrow, it's a different ball game. But we've got to watch the 68.40 level, because it very well could bounce there. So keep an eye on that. CME, another dark cloud cover, not a lot of volume. and it's already through the entry point by a decent amount. This is one that probably, unless it moves up tomorrow, probably won't materialize. And if it moves up tomorrow, then is this something we want to get bearish on? So another one, not terribly excited, but we'll see what happens with it the next few days. CMI, Cummins. This one kind of mixed on. We go look at, I mean, this thing's been beat up. 150 in a year. We've dropped from 150 down to 80, basically been cut in half almost. And now we're bouncing back. You see there's a weekly. And you see the indicators are kind of mixed. MACD and Stokes both are way up there on the upper end of the range. Stokes has rolled over a little bit, but it looks like there may be one more leg to the upside. And that's really all I'm looking for here. We've got almost a flag pennant type of pattern. And so if it breaks out, and this one, like the, what was it? I don't remember I think it was AGU, I want to say. We're ahead of this far enough, unless it gaps tomorrow, that we should be able to catch it. And we're talking about, 99.53 is the entry point, which is just shy of 100. But if it has a big day and breaks right through it and blasts right through 100, odds are pretty good it's probably going to go up to that 103 area. So this is, you're talking $3 basically of potential on a $100 stock. It's not a ton. But if the market did blast to the upside, this very well could keep running too. So, got a little tiny trading potential, but it could just, as you can see back here a couple weeks ago, I mean, we jumped 90 to 96. It ran 5-6 points in a day, which sometimes Cummins does. So we'll see. Express Scripts, another one very similar, pretty oversold, just had earnings. We've got a bullish engulfing type of pattern here. Not a lot of volume. You can see how this thing's been beat up. So it's very oversold. You can see MACD and Stokes both kind of headed to the upside. Bollinger Bands are pinching, so kind of mixed on this as well. I would like to see it build more of a little base before I get too bullish with it. So if this takes off to the upside, I would be a little more cautious, smaller position, just less risk. Volume's not been that spectacular. FedEx, another one not terribly excited about, but it has been very beat up, 185 to 125. Double bottom type of pattern. Breaking out of the midpoint today, a decent increase in volume. So there very well could be some bullishness to it. You can see MACD and Stokes both looking pretty bullish. It's starting to push the upper band. So this looks pretty good. We just have to make sure, I mean, if it gaps up in the morning, because it's already about 40 cents out of the entry point, which it can go about 50 or 60 before I'd be uncomfortable. So we'll see what FedEx brings tomorrow. General Mills, bearish engulfing pattern right at a resistance level after a big rally. We're talking 1, 2, 3, 4, 5, 6 days up. Gaps up this morning, runs a tiny bit higher, and then sells off the rest of the day. Volume increases a little bit. It is slight, but, and you look at the top, we got 1, 2, 3, 4. This is the fourth major hit on that point, which is an all-time high, it looks like. Yes, it is. So we've got General Mills hitting an all-time high, leaving a bearish engulfing pattern. That is a good start. The question is, does it just drop from here, or does it go sideways for a little bit? Does the bearish engulfing pattern, because we should all know by now that an engulfing pattern or any kind of reversal pattern means a change of direction. Direction's up. Reversal pattern could just go sideways from here. We'll see what tomorrow brings. Honeywell, very, very similar picture. Very similar picture. Almost identical, interestingly enough. That is weird. Honeywell shows aerospace and defense. They do a lot more than that, I think. They're capital goods. But look at the volume. I just noticed that. Wow. And these numbers may not be exactly accurate. We're just a few minutes away from an update, so this will probably kick into update mode here in just a second, in about 2 or 3 minutes. Unless I was going to shut off the auto update, but I'm just going to let it go. It'll run. We should be able to still look through these. So moving on to Hershey. This thing's jumping a little bit. Not sure what is up with that. That looks super weird. This should be, I don't know if that got moved or what. Something happened with this that's awkward. Not sure what happened with that. That's more like it, but this should be way down here. I'm not sure what happened with this. Bear with me just a second. I'm going to make this modification. Oh, and it's slow because things are updating right now. Darn it. It's almost done, too. Let's move on. I'll come back to HSY. I'm not sure what happened with that. I'm going to have to modify it. This one, though, Ingersoll Rand, you can see broke out of that. It was below the solid support resistance area there. I mean, the 5260, it busted right back above it. Looks like it wants to run up to about 50. Well, I got 55.85, 56.20 is the area, but it's already broken through it. You can see the volume today, and we've got the update now. It's just doing criteria right now, I think. I don't know that it should be done. Whoops. Like that there. It's almost done right now, so we should speed up. Criteria 100%. So it's doing. So the volume, you can see the volume, it broke up today, but very light volume. I mean, 2.2 million versus an average, which has dropped off a little bit, of 2.8. It's been averaging almost 3 million. So it's dropped almost a third, a good 30% drop in volume. So that's why I'm not excited about bullish. But there's the hard part about this is that in times like this thing moved $1.68 with light volume. So you can still make money with it. It's just challenging because you get nervous about the downside, because the volume's not really there to support a bullish move. So getting back to HSY, let's move this real quick. Should be down about right there. Readjust this stop to 91.35, which won't change it much. 86.64 is going to stay the same. We'll go 90.41. I only changed it 40 cents. But that's a little bit better. Not a huge difference, but it's already beyond the entry point by a decent amount. Enough to... Yeah, it's too much to justify at this point. So this would have to bounce back up. So not excited about that. Now we're getting to Mickey D's. Love Mickey D's. It's funny, I just saw a post on Facebook today too about showing the big standing computer screens, the touchscreen TVs that have all the software where people can walk up and order their own food, and they don't have to actually talk to a person. They just order right off the screen, all touchscreen, right? And that shows, here in the Seattle area, these geniuses in Seattle say, "Oh, we need to pay these people a living wage." And the picture shows the two standing touchscreens there at McDonald's. Says, "Welcome the new McDonald's replacements. For those of you that demanded $15 an hour, here's your replacement workers." And that's a sad reality. And it was kind of headed that direction anyway. But all they did, all these morons that voted in this stuff, excuse my French, I shouldn't call them morons. They're just extremely misguided. Okay, because to think that forcing an employer to pay somebody more than they're worth is actually going to be beneficial, it's going to work, it doesn't. It backfires. It's exact opposite. And there was another meme today I saw there that said, if you want to make more than minimum wage, then develop more than minimum skills, have more than minimum motivation. And if you show up with minimum skills and minimum motivation, and you contribute minimum amounts, then you get paid minimum wage. That's just a reality of it. And so, having a business mind and understanding just common sense, for God's sakes, it doesn't even take a business mind. Just common sense says that if you force an employer to raise their wages by 50%, they're going to do something to change that, because you can't keep the same business model in place when your wages are one of the biggest expenses of your business, and you force an employer to increase that expense by 50%. Something has to give. You either have to increase your prices or you have to do something to get rid of those wages. It just doesn't compute. It's just simple math. And I get so frustrated and so tired of people that are just retarded. Again, excuse my French, but it's just so irritating to me. It's just simple math. It doesn't work. It's like, oh, give everybody free college education. Well, who's going to pay the professors? Our free college education is going to cost $70 billion a year. Wait a minute, what happened to free? That's not free. There is no such thing as free. Anyway. Big deep breath off the soapbox. I'm a little excitable today, if you can't tell. It's tough watching people and knowing people that are going through challenges, dealing with stupid, retarded bureaucracy that is just dumb. And then people that vote in these things thinking that they're doing the right thing, and it's the exact opposite of what needs to happen. You want to lift people out of poverty, force them to lift themselves out. Take away the minimum wage. Now they have to go do something. Because if you take away the minimum wage and people are going to pay them $5 an hour, they're going to go find something. They're going to say, I can't live on $5 an hour. I need to upgrade my skills. Welcome to life. Anyway, let's get back to trading before I get really off the rails. Mickey D's, look at that. Look at that. Look at that. Look at that. Oh, that is so beautiful. I have not seen a Head and Shoulders this good in a long time. Beautiful. Beautiful. I love, love, love this. I mean, to have 22 symbols, 21 of them mediocre, if not just flat out suck. Again, excuse my French. I'm speaking a lot of French today. This takes the cake. I have not seen anything this pretty in a long time. But here's the thing. Not only the pattern, but watch this. Do you see that? Do you see that? Look at the divergence on MACD. It's massive. You're talking the high back here in November on the chart was 112, 113. You got a high in MACD. Look how low it is now. We're talking 124. 113. That is a significantly higher price and a significantly lower high on MACD. And even in the middle of these two humps, you've got the slow trend going higher and MACD actually trending lower. Every single high in the price is matched with a lower high on MACD. And now MACD is trailing off. It's down at the zero line and it's breaking below it. Stokes has broken below. It's breaking down. You got the Head and Shoulders pattern. You got MACD. You got Stokes. Everything here is ripe. Ripe for a break to the downside and a complete reversal of this trend that we've had that's been going up. Even with the market getting beat up, McDonald's has stayed up here. Yet MACD is saying that something is, this thing is sick. This is I don't know if I've said this here. I don't know if I've talked about it here, but MACD divergence is one of those things that you don't see something this significant that often. Usually it's real subtle. This is huge. The biggest one I remember seeing, which was years ago, back in 2000, was Juniper. 3 humps, definitively. I mean, the price was significantly higher on each hump. Very defined humps, right? Up and down, up and down. Nice little uptrend. Very defined, very clear. And also on MACD, very defined, very clear, but significantly lower. I mean, it was like they were mirror images just flipped. And it was just crazy. And the thing tanked in like 3 months, went from 150 to down to like $20 or something like that. I don't remember what the numbers were. It was insane. MACD is basically, it's like having the heart monitor on, and even though you're talking and you're normal and you feel good, the heart monitor is saying that internally something's going on there. And sometimes the heart monitor is not right. Sometimes it's something's not right, but it fixes itself. And that could happen here. But right now the heart monitor is saying that there's something internally going on here, that there's a problem. So not only do we have the Head and Shoulders, which is an awesome reverse, it's one of the best reversal patterns there are with respect to price. And I'm sorry I'm talking fast, but I'm excited because this is awesome. And you got MACD that is screaming that there's something going on here. Internally, there's something with the stock. And again, it may not play out. But what we've got here is a perfect, perfect setup. And I absolutely love it. I didn't even look at the volume to see what it looks like. We've got, well, it's Christmas time, so you can't look at it the left shoulder and the right shoulder. Look at the volume on it. The left shoulder is right around Christmas time, so can't really use the volume, even though it's light, to say that that's light volume. It's Christmas time. Then we've got the head. Pretty solid volume in that run-up. If you look at the run-up to the head, pretty decent little volume. Look at all those green days. Every one of them's up. There's a big gap to the upside. Not sure if that's earnings or what. And then we've got a drop a few days in a row that created the head. One big down day with big volume on that day. The rally to the upside to create the right shoulder, albeit it's a small right shoulder, but it's there. Volume is somewhat light. It's decent. So it's a little tiny bit lighter. It's not significant. But we got a little bit lighter volume on the shoulder. And then the drop-off the last 3 days, Wednesday, Thursday, Friday of last week, we had fairly solid volume. Not giant, not significant, but steady for 3 days in a row. And then very light volume. You see, we got an end-of-day update here. We're talking 5.5 million versus almost, that's about 40% less volume. Love, love, love this. Love it. It's the prettiest chart I've seen in I don't know how long. So now does that mean to go trade it? Not yet. Or not, maybe never. Maybe this doesn't play out. But right now it looks beautiful. Beautiful. I'm excited. So keep an eye on Mickey D's. MJN, I'm going to breeze through the rest of these because after Mickey D's, it's like these are all just lame. Who cares? I don't really mean, I don't mean that, but I do. It's like, these are kind of boring. Well, here's one coming off the top. We got a bearish engulfing pattern with a tiny increase in volume relative to the last 5 days. Not terribly excited about this one. Obviously, not like McDonald's. I mean, I haven't been excited about something like McDonald's in a long time. And I don't go to McDonald's very often. I love the food, but it's just so nasty and unhealthy for you that I can't do it very often. I take my kids there once in a while. That's about the only time I have it. And usually I just have some fries because the fries are delicious. Procter & Gamble. This has been dancing around this line, looking for the potential for a breakout to the upside. And it's been kind of stalling out. So I'm not terribly excited about it. It really depends on what the market does. If the market continues to the upside, this could very well go with it. So we'll see. Polaris, another one. Inverted head and shoulders, extremely oversold. You can see here we were 155 down to 70, more than cut in half in less than a year. So extremely oversold. No surprise to see a big rally, out of this, not necessarily a big one. But we've got the inverted head and shoulders. It broke out of the entry point there today. We've got that, some resistance there at 88.80. So depending on what happens tomorrow, if it breaks above that, probably look at moving the trading plan up to there and putting the stop below that 88.80 level and then leaving the target there. But again, look at the volume. The volume in the last week and a half, 2 weeks, as this thing's been rallying, has gotten light, very light. I mean, the average, we're looking at 21 a monthly average. The average is up at 2 million, and this thing's only doing less than 1 million. We're talking less than half the average volume, even though it's moving up. That's a huge red flag for a bullish move. And this is kind of pretty standard for all this stuff. In fact, I want to look at the SPX. Look at the volume today. We have an end-of-day update now. We have end-of-day data on SPX. The SPX volume is terrible. I mean, 2.4 million with an average of 3.15, which has dropped off. I mean, it went up, but if we look at the average from the last several months, you're looking at 2.4, and we hit, 2.4. We're basically about the average for everything else. We're at a normal kind of volume. But compared to, as you can see, what happened here with the big drop in the market, volume increased. We had a big increase in volume from the big drop, which says we're bearish. We got bearish volume. We got selling off. And now we've got a rally on lighter and lighter volume, which it could keep rallying, but it's definitely a huge red flag. Definitely a huge red flag for the bullish move. It is a bearish indication, actually. Here's Q. Look at the last two quintiles. Dark cloud cover. Not a huge volume, not a big drop in it. So, again, not terribly excited, just looking maybe to take advantage of an overbought situation. It's already 45 cents, a little too much below. So we'll see what happens tomorrow. Another one not terribly excited about. But Ryder, that's the same as Polaris. It's a little bit above the entry point. Inverted head and shoulders, broke out, but with very light volume, so not excited about it. If I was going to trade this, if it pops up and gives an opportunity, it looks decent, I would take a smaller position because of the risk, additional risk there. So with that, I'm going to wrap it up, and got a few extra rambles in today, little frustration fly, but hey, it's life, baby. It's trading. Sometimes we got to change it up, mix it up, play a little bit. So anyway, hope y'all have a great night, and we will all see you very, very soon. Y'all take care. Bye-bye.